Let's talk about Latitude Finance, ASX, LFS. This company is one of the newest listings right now on the ASX. And this company has actually been around for quite a while in Australia and New Zealand, and you might even be familiar with this company's products and services. So in this video, we're going to look at the company's current share price, an overview of the company, its IPO prospectus, and some key metrics of the company in my opinion. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, this video is not financial advice. It is not a buy recommendation. Do not buy into this company just because I'm making a video about it. This is just a rough overview of the company and its offerings. We're of course speaking in a very general sense only. I just have a passion for investing in finance, same as you. So let's get into it. So first off, let's take a look at the company's share price so far. So we can see that on the first day of listing, it hit nearly $3 at the highest point of trading. And on this day, the volume was the highest as well at about 5 million shares traded. And this is pretty expected because this was the first day of listing. So of course, there's a lot of hype and excitement and there's a lot of volume going on, a lot of trades happening. Now, if you contrast these price movements to the actual price of the share listed on the prospectus, the prospectus had a share price of $2.60. So the share closed on a premium that day at $2.70, as you guys can see. And a lot of people bought and sold the share at nearly $3, which is quite a big premium on the stock. So the stock closed at $2.70, which is about 4% higher than on the prospectus. Now, fun fact about IPOs, on the first day of trading, historically and statistically speaking, the share prices do finish up on a premium, and if you bought the stock before IPO, most of the time you will come out on top, historically speaking, but of course that's just statistics anyways. However, in this case, we have seen this play out with Latitude because the share price finished up 10 cents higher than what was on the prospectus. However, as you guys can see that on the next few trading days, the share price was finishing up lower and lower, and things got really interesting because the share price had declined roughly around 9% since listing. Now, at the time of filming, the stock is trading at $2.55, which is at about a 5-cent discount than what was said on the IPO. So all those institutional investors, when they bought the stock pre-IPO, we can say that they may have bought at a premium price. So in this case, it might seem that the stock was seen as overvalued, which is why over the next couple of days, the stock kind of went down in value. And now it seems to be slowly going up, as we can see on this graph right here. And we've seen this happen with quite a few stocks as well, not just Latitude. So now let's have a look at a quick overview of the company and what they actually do. So just based on their website, what you see is basically what you get. You've got personal loans, car loans, Latitude Pay, credit cards and insurance. So it's all pretty straightforward. Now, having a look at the main value propositions for the customer, we can see that of course the first thing they want to focus on is being easy. So that's fast applications, fast turnaround time, online platform and online apps to make things as easy as possible for customers. Of course, if you're in this digital age, you want to kind of embrace technology and not go with paper forms and stuff like that. And the second thing is of course no hidden fees, and that means that they are very big on transparency. With companies like this who offer personal loans and online loans, we can often see that they charge some sort of hidden fees that the customer might not be aware of, and sometimes that's how they make more money on the loans. But with Latitude, it's good to see that they're being very transparent about their fee structure. But the third point that they've made, and I found this pretty interesting, is the fact that they are kind of tailoring their rates to customer circumstances, and they are really assessing applications individually and on individual circumstances. And now we're seeing this trend continuing of these online lenders doing risk-based pricing, and we've seen this with other competitors of Latitude as well, like Harmony, Fyzee and MoneyMe, who are essentially doing the same thing. So I'm seeing that this trend will continue moving forward. And this is kind of like the American system of doing things where customers are given loans based on their credit rating. You know, if their credit rating is good, they get a lower rate and vice versa. Now, we haven't seen this happen in home loans yet, at least to my knowledge anyways, but I do think that moving forward, we might actually start to see this as well. So I'm gonna have to keep an eye out for that and let's see what happens. And it seems like a pretty reasonable thing to have this happen with personal loans first to see how the trial happens. And if the trial is good, then they can roll it out to home loans as well. Now guys, if you are a bit unsure about how your credit score works, what sort of stuff is on it, how to improve your credit score and how to check it in the first place, I've made a full in-depth video which is an ultimate guide to credit reports. There should be a link in the description and there should be a pop-up somewhere here on the screen as well. Go check it out. It's an ultimate guide. It should have all the information that you need. And the best thing is this is especially tailored for Australians, so you can get the best information possible. Now, another big offering that they have is Latitude Pay. As you guys can see, this is another buy now, pay later offering, and this trend is literally everywhere now. So I'm not too surprised to see this with Latitude as well. And with Latitude, you can do 10 weekly interest-free repayments, so you can see how it's different from other buy now, pay later providers in terms of payment frequency. Now, at the moment, Latitude Pay actually has over 350,000 active customers, and it was only launched about 18 months ago, so they're not small by any means. They're actually quite huge. And at the moment, they've integrated with brands like Harvey Norman, Good Guys, JB Hi-Fi, so the next time you go to these places, you will see Latitude Pay as an option as well. And they're really trying to roll this out to merchants as well for them to get on board with this and have Latitude Pay as an option for customers. Now, along with that, Latitude also has their insurance offerings, as you guys can see, for personal loans, credit card, and travel insurance. These seem to be quite big categories here. So they're also working very hard to kind of diversify their income streams, because they don't just want to keep on making money from interest revenue, they also want to start making money from insurance premiums as well. And looking at some competitors of Latitude like Fyzee, Harmony, and MoneyMe, I haven't seen them offer insurance just yet, if I'm not mistaken, so it's good that Latitude is diversifying in this other vertical as well. Now, they've also got a very popular offering, which is the Latitude Go MasterCard. As you guys can see, when I was working as a mortgage broker, I would see nearly every customer have this card. So it's a very popular product to say the least, and they've done some really good partnerships and marketing to make sure that this product is something that a lot of people get and have. So let's dive into some of the main points of the prospectus. So taking a look at the offer price, this is $2.60, and this was sold to investors pre-IPO, as we saw, and we can see that the share price is now trading below this, and after the IPO is completed, there will be a total of 1 billion shares remaining. So based on the figures, the business is valued at around 2.6 billion based on this prospectus, but now we can see that it's a bit less than that now. And 76.9 million shares were offered to investors for the IPO. So this basically means that they were trying to raise $200 million from this IPO, and the way that we get to this figure is just by multiplying $2.60, which is the individual share price for sale, multiplied by the actual shares for sale, which is 76.9, and then you get a number which is roughly just under 200 million. So based on this information, the company was selling off roughly around 7.7% of their overall stake in the IPO to investors. So for a business like Latitude, which is mostly based on lending and making sure the customer pays them back on time, their business model is only going to be as good as their customers. So let's have a look at their credit quality, because the more quality customers they have, the more they will add to this business's bottom line. And having a look at this table, Latitude measures the quality of customers using a CR scale. So CR1 is very low risk, all the way to high risk, which is CR5, as you guys can see. And we can see that roughly around 40% of the loans are CR1, which is very low risk. And of this category, only 0.12% of those loans were later than 90 days in terms of repayment. So customers haven't paid the loan for greater than 90 days. And this figure is quite small, which is good to see. So by this table, we can roughly see that around just under 90% of Latitude's customers are medium risk or lower. But once you get into the CR4 to CR5 territory, which is moderate to high risk, you can really see that the arrears really starts to increase, because it goes up to 2.35%, and then for the last category, which is high risk, it jumps up to 6.64%, which is like a threefold increase. So from a risk management standpoint, they seem to be doing fairly well. Now, looking at the company's profitability, I think this is one of the more important measures to look at, and this measure is the net interest margin, as you guys can see. And the net interest margin is basically the spread the company makes between lending the money out and borrowing the money. So if a business like Latitude can borrow the money at 5% and then lend the money at 15%, as a very basic and simple example, they will have a net interest margin of just about 10%. And on this graph, we can see that the net interest margin is improving slightly. It's gone from 12.2% to 12.65% in just about 2 years. And the 90-day arrears figure seems to be going down as well. As you guys can see, it's gone from 1.09% to 0.67%, which is pretty good to see. Now guys, I just want to briefly talk about the CEO of Latitude, who is Ahmed Fahour. Now if you guys have been following him for a little bit, you would know that at the moment there is a bit of controversy surrounding him because of reasons like this. And this sort of stuff is obviously out of my league, but the reason why I bring him up is because of his experience in the past. Ahmed has been the CEO of Australia Post, of NAB as well. Yes, the Big Four bank, National Australia Bank too. So coming into Latitude, he's got a huge wealth of experience managing two insanely huge businesses, and the NAB experience is going to come in quite handy because NAB relates the most closest to the Latitude business because they're both in the business of lending money. So in terms of the leadership team, I do think Latitude has the upper hand here. So guys, in terms of my personal opinion, I'm going to hold off on buying this stock at the moment. I don't currently have stocks in the company and I don't plan to invest in the near future anyways. And I'm going to wait for all of this hype and all this dust to settle before I make any decision. Now, if you guys have a look, in FY20, the company made a loss of roughly around 32.5 million. But in 2019, they made a profit of 19 million. So that is quite a significant drop, as you guys can see. However, the company still has $500 million in cash right now. So they're not going to be going under anytime soon. They're actually well liquid. But for me, as I said, it is too soon to invest. But let me know your thoughts on the company as well down in the comments. Now, if you enjoyed this video, I made a similar video about Fyzee, MoneyMe, and Harmoney. These three are also competitors to Latitude, and they're focusing on giving personal loans to Australians, and they're also focusing on fintech. So you might want to use these three videos as a starting point for your research. And guys, thanks for watching. Please like and subscribe, and I'll see you in the next one. Bye now. Now guys, if you enjoyed this video, check out this video.